TC Energy says it is going to provide an update later today on progress cleaning up that Keystone Pipeline and, of course, spill. And, of course, people are waiting to hear when that giant pipeline will reopen with capacity of 600,000 barrels of oil a day. But the company has not provided any date. And it says tough weather. Bad weather is hampering operations. We're joined by Rory Johnston, founder of Commodity Context. Thanks for coming on.
Thanks for having me back, Andrew.
I've heard it said that this spill is bad. Obviously, it could trap oil in Alberta, but at least we have other forms of egress now that we didn't have a few years ago.
Yeah, and I was the last time I actually think I was in studio with you would have been roughly around the time of the last Keystone spill in 2019, so before the pandemic.
Well,
and honestly, before that in 2017 as well. And if we look at those two kind of prior spills and outages on the line, which each lasted about 2 weeks, followed by kind of a couple months of lower pressure and thus lower capacity as they were monitoring things. But you're right, things have changed a lot since then. Back then, the main thing that the Canadian industry was worried about, and the head of all the headlines was egress constraints, pipeline bottlenecks, et cetera. Since then, we've had debottlenecking on Enbridge's mainline. We've had the Line 3 replacement project come online. And we actually now have the experience and the kind of past capacity of some of that rail. That, rail is now around kind of 200,000 barrels a day or maybe 150,000 barrels a day exports versus a high point back then of 400,000 barrels a day when things were really kind of when differentials were wide and you needed to kind of get barrels on the rail tracks in order to get it to market. So that, I think, is a bit different. And something else that I think your prior guest just mentioned correctly is that there's also a lot more inventory capacity in and around Hardisty, Edmonton, and through the rest of the patch that is currently empty, or a lot of it is empty. So there's more of a buffer there. So I think that it helps explain why we haven't seen as much of a price response, or at least a differential response, like we saw immediately back in 2017 and in 2019.
Because they can put it in the tanks. They're not forced to sell the oil at a discount.
That's exactly right. And I think this is very much a condition of how long this outage lasts. Yeah. And something you did, correctly note at the beginning here is that we really don't know exactly how long this outage is going to be. There are a couple things that are complicating factors. The weather is making some of the repairs and remediation more difficult. We don't know when that southbound line from Cushing from Steel City, Nebraska into Cushing is going to reactivate. But, the location of that leak also, creates a little bit of hope that this isn't as much, it's not as large a potential outage as what we saw in 2017 and 2019 when the outage was in the Dakotas on that kind of main trunk line down. So there is the option of restarting that eastbound line into Illinois and into Patoka.
Right. Let's have a look at that map again, because it occurred, and usually Murphy's Law would say it would happen above the spin-off point, but it did occur below, so they can still funnel oil to Illinois.
Yeah, and that's something that actually Bloomberg had reported over the weekend that TC Energy was really hoping to do this quicker than they have. They haven't managed to do it yet, as far as I'm aware, but that would take a huge amount of kind of strain off. I think it also goes to the fact of why these companies and these traders haven't yet kind of pressed that differential wider. I think the other interesting thing here is that, for the most, the differential is actually pretty wide. At $29 a barrel, it's been as low as kind of sub 30. These are wide differentials, but what's interesting this year is that none of it has actually been because of pipeline or egress constraints. It's actually been, the differential down at the U.S. Gulf Coast around Houston has actually been tugging around the Hardisty differential, and that's because of these global quality-related issues that heavy sour crudes are just generally less valuable right now because of the lower value of things like high sulfur fuel oil, which, unfortunately for WCS, it has a higher natural yield of. So that kind of gets pushed back into the WCS differential. So what's interesting here is, if this lasts a long time and we do get egress constraints, then, all else equal, you're going to have a quality differential, that's wider than it historically typically is, combined with this kind of egress pipeline transportation differential that's going to need to widen in order to actually pay for and incentivize that rail to come back into service.
I saw one headline that Colombian heavy oil is making its way to the Gulf.
Yeah, and you have seen other kind of, heavies that have, that have been competing. Another thesis is that, the discounts being forced onto Russian Urals barrels are causing kind of additional competition and pushback against, heavy sours. But I do think part of the challenge here and the reason why heavy fuel oil and things like naphtha, which are these byproducts often of refining WCS, are so weak is that you have this, something that's been going on for a lot of the years, this really, really tight refining market and these really, really high and wide crack spreads for diesel. So as global refineries, you've lost a bunch of more sophisticated refining capacity, like in the United States, but as the refineries chase that diesel crack spread, less and less sophisticated refiners are doing it. So you have more and more of this lower value product spinoff, like fuel oil, like naphtha. So the hope is, as more of these more sophisticated refineries, like the Al Zour refinery in Kuwait and the Dangote refinery in Nigeria that hopefully will come online next year, as those come online and we start to fix this refining kind of unbalanced barrel, as I call it, that hopefully will also help repair some of the relative crude quality value issues that WCS has also been facing.
So with this big fat discount on Western Canadian Select, because they're able to put the oil into storage, they're not necessarily leaving loads of money on the table at this stage.
Correct. And I think that's, if this is, again, like a 2-week outage followed by a period of lower pressure, which I think, until we hear otherwise from TC Energy, I think should be the base case scenario here. If that happens, it seems like there's enough inventory space to kind of smooth that out. And because we're not hyper tight on egress in the first place, I think that other capacity kind of reduction isn't going to be especially penalizing. But I do think that, even if this goes on another week, I do think we are going to eventually see these differentials widen because we're going to need to start rallying some of that rail just in case.